B. Who is it? Who is it? It's Mike's phone. I hear you, Mike. Mike. Mark, good evening there from Idaho, Ohio. What's happening there, Mike? Mark. All right, wait a second. We got somebody. I can hear you fine. All righty. Who do here tonight? All right. Uh-oh, sign in. Hot damn. All right. Maybe it'll pop in a minute too. Let's see who do I have it tonight. Laura, good evening, Miss Lauren. How are you? Christopher, how you doing? Andra Gracia. Gracia? Hi. I can I subscribe? I'll subscribe here to you. Okay, because your channel and it's like a whole heck of going on. I have like to offer you, but it is over on the other channels. So that being said, let's see, where are we? Where are we? Christopher, retirement tour. Way to go, Christopher. What did you used to do anyway? Business, what? Page of London. Doesn't surprise me. Vista sign up is in the house tonight. Tonight, you'll mine so sweetly. I can't sing for beans. Anyway, it is 9:08 p.m. Monday evening. So, stock market open today. Isn't that weird? I don't know because I have other things to do. I do my stuff in the morning. I do my trading. I just what's happening? Oh, Drew, Joe, Billy Bob. Holy cow, Billy Bob, what's happening? Drew, how you doing? Bryce, Pre-Storm. Oh, Preston, Joe, Bradley, Alex is in the house. Way to go, Alex. Kevin, Mark Mako, Big T, Cash Moyes. Okay. Michelle and Drew. Okay. Mike and Love. How you doing, Mike? Nice to see you back again. Savvy Chick, Bohemian. Good evening. Happy Monday. Okay. Thank you for that. Madman Manticomo. Mad Manticoba. Okay. Cool. Gotta love it. Who do we have down here? Mike, David, can you provide a list of your top 10 stocks to trade? Absolutely, Mike. You ready? You got a pen, pencil, crayon, marker, mascara, lipstick? I don't judge, Mike. Okay? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on old Wally Worlds. Wait a minute. Warren. Sorry, anything on Warren's list. Big T, Michael, Matt, Jimmo, Rafat, good evening. City Dog, JR46, Junior 46, okay. Chris Perna, Nelly, how you doing? I hate school. Honey, enjoy school. You're never going to have a time in your life ever where you are going to have so many people your age all in one area, all thinking the same things, all doing the same things, all having the same interest. Nope. Once you get out of school, it's all over, honey. It's no. King Reed, Camp Road, Dunstuck. Okay. Ice Tea Man. Jane, good evening. All right, alrighty. Bad Influence. Shelton, good evening. David. GUI pays a fat weekly dividend. I think you will find it interesting. Well, the funny thing, David, I've never heard of that, but let's take a gander at it and let's see you're so excited. Heard of it. GOOY. Hell no. No. I don't do monthly options. Okay? Pen. You ready, Mike? February, March, May, August. Those are months of the year. That means I can trade it once a month. once a month means I'm going to make 12 to 24% a year. Yeah, no thank you. Shelton, sit tight. We'll be right there. Kate, how you doing, Miss Kate? Thank you, thank you. Christopher grandfather, known as Papa William, died on Tuesday a few weeks ago. I have no idea who Papa Christopher is, but they call me Papa G. So, nice to meet a fellow Papa. Jobian 97. Okay, what's your average cash flow per year with investments? Plenty, and it's inappropriate to ask that question. Lazy Rancher, why Caterpillar? Did you know that Caterpillar just so happens to be a dividend king? Now, a dividend king means this company's over 100 years old, has 5 decades. Uh-oh. Okay. Sorry about that. Got 5 decades. That's 50 years of increased profits. That's a half a century of consistent profitability. That's why Caterpillar. Okay, how old are you? Oh my goodness, I'm 62. 62. Anyway, what do we have over here? Teach Me Shelton, that's what we're here for. Madman, isn't CAT towards an all-time high? Well, let's check it out. CAT. Check that out. Caterpillar, all-time high, 690. We're going to say no to that one. I don't do the high of the year. I don't even do the high of all time. Just no space to move. Kate, thank you, Kate. Christopher, you're 19. Oh, way to go, Christopher. Ken Barbie, Wall Street would recruit you if you did 50% per year. Yeah, I tell you what, no, thank you. Think about it. No, thank you. You get a certain price. Ken, you get at a certain place in life. Okay? Where I'm retired. I make enough money to satisfy all my needs. Okay? What do I think about fly? Oh, Shelton, sit tight for a second. So anyway, Ken, no. Even $1 million a year, I would still say no. I like my life just the way it is. I sleep until I'm done. I get to do whatever I want. I get to hang out with my little buddy, my 5-year-old grandson. I get to hang out with my kids. They're right down the street. About a half hour, 45 minutes. How tall are you, Christopher? These are inappropriate questions here. We are here to learn how to invest. I'm not for a GQ model type scenario. No, so my age, my height, my weight, all that stuff is a little inappropriate, Christopher, but thank you for your interest. Fair enough. Thank you, Ken. And besides, if I was there, I wouldn't be here with you fine folks teaching you what I have learned throughout my life. All right. What's your net worth, Daddy? Hey, Dr. Fazli? Oh, Dr. Fazli. Good evening, good evening. Again, I'm not going to ask you that question, so don't ask me that question. They made it up. Cat will really boom if we take over Greenland. What would give you that idea? I don't think Caterpillar makes anything that cuts through the ice sheets. Thank you, Christopher. Don't need to know that, but all right. Camp Road, up 2% on covered calls today. Thanks to everything I've learned from you. You're doing a great job. That's more than 1%. Camp Road, awesome. Good for you. Keep up the good work. Make sure never buy something you don't want to hold long term, because if and when the stock market crashes, you may be holding on to that thing a little bit longer than you want to. But it is what it is. Okay? Marcel Doro, how are you? El Chapo, how is option verticals works? Oh, wow. Option verticals work awesome if you know what you're doing. And if you have to ask me a question like that, you shouldn't be looking at option verticals. Okay? You need to perfect something simple and easy first before you go into option verticals, because both sides of the vertical. Is this financial advice? No, MC is not financial advice. I'm just answering questions. But thank you for that. What do you think on fly? Shelton, I haven't forgot you yet. Okay, sit tight for a second. Omar, T-Sem. I only hold two stocks, VTI and UVXY. Ken Barbie, I feel bad for you. Okay? Sit tight. We're going to go over some of these in a minute. Good picks are getting harder to find. No, they're not. You just got to know what to look for. Keep going. Okay, let's pause for a second. MC, thank you for that. No, it's not financial advice. It's mere observation. So you give me something to look at, I'll take a look at it. Well, all I'm doing is reading the numbers on the chart, reading the numbers on the board. That's it. You want financial advice? Go talk to a financial advisor. I am not a financial advisor. What's my favorite YouTube? Okay, Christopher, you're getting off topic, dude. Please stop. Okay, I have no problem chatting with you and hanging out with you, but we're talking about investing. Okay? I'm not talking about anything that you want to talk about. Terribly sorry. Thoughts on SCHD? Oh, hell no. Hold up. Now, SCHD. Okay. SCHD having issues with the opinion on what's the best dividend stock to hold. Me, opinion on the stock to hold. Mimi, I know absolutely nothing about you. So I really honestly can't give you any answers that you might be looking for. Okay, you want a conversation with in-depth answers, you got to give me a call. Either drop your phone number in a little DM or go to the website and book a call and we can have a chat. Promise, Mimi, I won't try to sell you anything. All right? But if you want to have a conversation like that, okay, that's a little bit more in depth where I need to know more information about you. Now, okay, so SCHD. Before I do anything else, I'm going to open this up, take a look at historical data. Who came up with SCHD? Who? SC10. GUI, yep, nope. Up, down, how's it going? Merck, we'll take a look at that in a minute. 41.1 dividend yield, buy and hold. David, what are we talking about? David, all right. David thinks GUI pays a fat weekly dividend. Hold tight, David. We'll take a look at that a little deeper. All right. What I'm looking for specifically, okay? In 2008, hold on, I'm going to hold these here for a second so I can answer some of these questions. Okay, so in 2008, my 9-year-old daughter comes up to me one night and says, Daddy, what are you doing? Can you teach me? So here, my 9-year-old daughter wants to learn what I'm doing. She wants to learn how to invest in the stock market. Got a few minor problems there. She's 9 years old. What does she know about stocks? As a matter of fact, what do you guys know about stocks? Well, what? I know stocks. Give us your money and we will give you a portion of our profits. That's how the whole game started. Back in 1602, a bunch of guys got together and said, you know what? Let's build a big, huge company. The only way we're going to be able to do that is to raise a whole bunch of money. So literally in the late 1500s, early 1600s, they went door to door. Hello, I got a great deal for you, and we will give you a portion of our profits. That was the original agreement. Okay, the company name was VOC, the Dutch East India Shipping Company. Now, if you know anything about the Dutch East India Shipping Company, it was the biggest, baddest company that ran for 198 years, and they averaged 18% per year for 198 years. They finally folded because of corruption and mismanagement, but give people money, they're always going to mess things up. Look at the state of the economy is. Give people money or access to money, and they're going to mess it up. Anyway, give us your money, and we will share our profits with you. So at this moment in time, we have 10,820 different companies to choose from here, just in the United States. So how do you decide? How do you decide where to put your money? Well, let me tell you how I did where to put mine. Number one, I'm 62, which means I'm retired. What I'm looking for probably is not going to be the same what a lot of you are looking for. Okay? I'm looking for simple, safe, predictable, consistent 1% per week. That's what I'm looking for. Okay? So, with that comes 5 very, very simple rules. Rule 1. Never buy something you do not want to hold on. Okay? If you don't buy it, hold it for the rest of your life, don't buy it. If you don't understand it and you don't know what they do and you don't know all the details about the company, don't buy it. It's really that simple. Why would you buy something you don't understand? It just makes no sense. Second, rule 2, never sell at a loss. It defeats the purpose of the whole game. And if you think this is not a game, someone has been lying to you, because it is a game. Just like Monopoly. 4 green houses, 1 red hotel, round and round, round you go, $200, there you go. Okay? Same thing. Markets are what they are. Real estate market is what it is. Futures market is what it is. The stock market is what it is. Okay, we're buying, we're selling companies' shares in order for us to gain a profit. You got to figure out what makes sense to you. Because what makes sense to me might not be the same thing what makes sense to you. I want safe, predictable companies that are consistently profitable, that allows me a weekly cash flow. Rule number 3. This is always a good one, and I can tell a lot of you have no clue when I say rule number 3. Never put your money into a company that's not consistently profitable. VTI, UVXY, QQQ, yeah, they're not consistently profitable. When I say consistently profitable, I mean more money, more money, more money, more money, more money, more money. The dividends, the profits should increase every single year. The dividend kings. 5 decades. That's 10, 20, 30, 40, 50 years, a half a century. Every single year. In order to be a dividend king, you have to increase your profits year after year after year after year after year. The dividend aristocrats, 25 years, increased profits. Dividend champions, 25 years of increased profits. Dividend contenders, 10 to 24 years of increased profits. Okay, anything on Warren Buffett's list, fine. That's 5 lists. Out of those 5 lists, that's only about 300 companies. So what about the other 10,300 and whatever? What about them? I want nothing to do with them, me personally. Now, you can ask me to take a look at anything you want. I'll take a look at it. And I'll give you my opinion based on what I'm looking for. And I can basically tell you what you're looking for, what I'm looking for are probably 2 different things. Okay? I'm looking for safety. I'm looking for predictability. I'm looking for consistency. I'm looking for profitability, and number one at all, I'm looking to protect my nest egg. So the money that I have, I don't have the luxury of being wrong. That means if I was younger and I bought something like the Qs or VTI, some crap like that, and went down and I sold them at a loss, yeah, I have time to pick it up. Well, I'm 62 now. I have no desire whatsoever to go back to work. Okay, yeah, I'm able-bodied. I can go back to work. But guess what? I've already been working a half a century. That's 5 decades. A half a century. My very first job was in 1974, Old Man Simmons Farm. You know, picking corn, taking care of the tomatoes, squash, being out in the woods and doing firewood. Yeah, we did a lot. Took care of the cows, the pigs, the chickens, all that crap. When I was just a wee lad. Marmar! It's not really inappropriate, more like irrelevant. Okay, Marmar, I'll let you have that one. But still inappropriate to ask that type of a question. Okay? Okay, that's not, okay, anyway, besides the point. Where were we? Okay, rule number 4. Weekly options only. When I say I want consistent weekly cash flow, I get 2 choices. 1, to buy and sell something that trades on a weekly basis, weekly options, or sit in front of my computer and stare at this stupid thing all along. no desire to look at this thing all day long. None whatsoever. So you guys are going to give me suggestions. I'm going to take a look at them. And yeah, most of you will probably come up with something that's going to be a no. Because I'm looking for safety, predictability, and profitability. Okay? That's what we got. Now, somebody wanted to take a look at SCHD. My SCHD. So over here, we have Yahoo Finance. If you're going to be investing in anything, you need to have access to a financial website. Financial website gives you information to help you make a good, educated decision. Okay. I'm trying to figure out who do we have here. That's not me. Participants. There we go. Who's in the background making noise? Doug, you got some noise going on back there. Josh, you too. Gotta mute you guys. There you go. And Michelle. Gotta mute you also. And that's what it was. It was Michelle. Anyway, let's go back to where we were. Okay. Rule number 5. Make sure all the numbers work. When I say all the numbers, what am I buying it for? What am I selling? How much am I profiting? Is it 1% or more? We're going to get all that as we progress. So let's take a look at SCHD and let me let you know why I don't like it. You ready? So Yahoo Finance. What we want to look at is historical prices. This is what's called the data stream, where all the data is. The high, the low, the open, the close, the volume, all that stuff. Every single trading day, every single day. February 2nd, January 30th, the 29th, 28th, 27th, 26th, 23rd, blah, 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 blah. Every single trading day, the information is right there. It's free to access. So what do I want to look for? I want to look for, is the company profitable or not? Have they consistently increased their profits year after year after year? Well, let's find out. So I want to look at dividends only, because the name of the show here is In Stock Talk. We're looking at companies that consistently increase their profits year after year. Only way to find out is to go into the data stream, the history, and find out, did they make more money this year than they did last year? Did they make more money last year than the year before? So on and so forth. So when I say make sure the company's profitable, I got 2 decades. That's 20 years. Is the company profitable consecutively for 20 consecutive years? Year after year after year after year. That's what I'm looking for. Okay, no, don't give me the crap. Well, it's the stock market. Companies that no. Stock market's been around for 400 years. 420, what year is it? 26? 424 years. 424 years the stock market has been around. So finding a company that has 2 decades of profit, it ain't that difficult. Okay, I know the U.S. has over 300 of them. Let's find out. So 20 years ago was 2006. So let's take a look at SCHD 20 years ago. Well, see, here we have a minor problem. SCHD didn't start paying dividends until 2011. So it's not 20 years old. That's a no right from the beginning. But let's dive in a little bit deeper. The very first dividend, 4 cents. Okay? 4 cents. That's it. 4. Okay? 4.6 higher. 6.8 higher. 6.9 higher. Hey, this looks pretty good so far. Let's go in. Okay, 6.9, 8.6 higher. 6.6. Hold on. That's a 20% drop. A 20% drop from 8.6 to 6.6. That's a 20% drop. That doesn't give me a warm fuzzy. That is not consistently profitable. But hold on. It actually gets worse. All right? 6.6, 7.5, 7.7, 8.3, 8.2. That's backwards. So far I get 2 backwards and we're not even into 2015 yet. 8.2, 8.9. Okay, so higher, higher, lower, higher, lower, higher, lower, lower, higher, higher. Lower, lower, higher, higher, lower, higher, lower, higher, higher, lower, lower, higher, lower, higher, lower, higher. Do you see what's happening here? Up, down, up, down, up, down, up, down. No consistency whatsoever. That's not what I'm looking for. Okay? Rule number 3, okay? Make sure the company is consistently profitable. SCHD, no, it's not. Now, Ari Spendola, the Qs, we're going to run into the exact same thing. Okay? Q, Q, Q. Let's look at the profit Qs going back to 20 years, all the way back 20 years, 2000. Back to 2006. So, okay, come on. Come on. Uh-oh. Computer froze. It's like, freeze. Come on. Damn it. Time to delete. James, I don't want to hold any stocks longer than 4 minutes, but it is what it is. Time to delete, brother. I can't help you out. Okay? Mikey G. I have not been doing 1%, but keeping it very low delta. Doing good on weekly income. Nicely done. I can't even pronounce that one, but you want to take a look at Hood. All right, so apparently we're having a little bit of an issue here with Thinkorswim. Not Thinkorswim. Yahoo Finance. We're basically stuck. All right, let's go back to. All right, take a look. Yeah, QQQ, SPY are not consistently profitable. They go up, they go down. They go up, they go down. Not what I'm looking for. I want consistency of profitability. Laurie, thanks to you, I'm making over 1% a week, mostly in one day. Hey, nice going, Laurie. Kiki, AGNC. GNC. Thank you to AGNC, and here's the reason why. All right, Kiki, you ready? Now, AGNC, besides the fact that it was at a high of the year, now it's dropping. Besides that, okay, see, look, now it's falling down. Besides that, Kiki, you ready? 0, 0, 0, 0, 0, 0. The premiums, 0. Okay, I want weekly cash flow. But if I'm wrong and the stock goes the wrong way, well, it's not offering any wiggle room. So no, there's certain stocks I just don't do because the premiums are horrible. AGNC, ET, and a few others. No. Sorry. Mimi Island, 42. How are you? Jane. Good evening, Jane. Mimi, good evening. 100 milli. Hello. Kikez and Keto. All right. Thank you there, Mimi. That was nice of you. Cousin Astra. Uh-oh. Uh-oh. Now I'm the second favorite show? Dude, what happened? All right. You must have found that other channel. Alexander, BX. Is it BOX or BX? BOX. BOX. Alexander, no. February, March, June, September, January 2027, January 2028. Those are months of the year. I don't do monthly options. When I say rule number 4 is weekly options only, I have no desire whatsoever to look at monthlies. They just don't pay the same. IHSJO2. I have no idea what that means, but let's take a look at Hood. Now, I'm pretty sure that dividends. But here's the thing. Look what Robinhood did. Okay, here's the high. Now it's dropping. Why would I want to buy this if it's dropping? If you really like Robinhood, okay, here's your last 30 days. 30-day high, 30-day bottoms today after a gap down. If you really like Robinhood, keep your eye on it this week. Because this week, hypothetically, it should find a bottom and turn around. So I'm going to write that one. No, I'm not, because they have no dividends. Wait for it to turn around. Wait for it to find the bottom. See? Bottom, then turns around, goes up. Bottom, turns around, goes up. Just give it a little time if you really like it. Alexandra BX. Isn't that Baxter BX? No, it's Blackstone. Okay. I don't need to see all those. Don't need to see all those. All right, here we go. The high, the low, where was it? Where is it? Look at this. Down, up, down, up, down. It's coming down, but if you really like it, keep your eye on it. It's dropping. See, here's the high. Now I got profit taken. Here's the bottom. So give it a little time. As soon as she finds the bottom, she'll turn around and go back up, because that's what stocks do. They go up, then they go down, and then they go up, and then they go down. It's just all what it is. That's all it is. Okay. Do you like to sell puts? Yes, I do. Thank you. Jason, I'm 46 and not yet at what I want as a nest egg. Do you recommend this strategy for me? Now, Jason, I know absolutely nothing about you except for the fact that you're 46 and your name is Jason. But if you want to have a chat, Jason, just go to the website, book a call. We'll have a chat. Now, is it right for you? Well, I don't know anything about you. Okay? So this is some questions I ask, like, how old are you? Okay, are you married? Are you both on the same page? What is your number? And by the sounds of it, Jason, you probably don't even know what your number is. And the number that I'm talking about is, how much do you need on a monthly basis to live comfortably? Now, there's a huge difference between needs and wants. Because you can want the moon, but what do you need? You need 3 things, and only 3 things. Food, shelter, clothing. Everything else is a luxury. Okay, so look at it that way. So what do you need? Okay, do you need $3,000 a month, $5,000 a month, $10,000 a month? Okay, great. How much do you have to work with? How much are you willing to put in order to get to your goal faster? Okay, so what I'm doing, Jason, is the money that I've made in my working days. My first job, like I said, was in 1974. Okay. Now I make 1% a week, and that takes care of my monthly bills. Okay. Doesn't give me a whole lot to, fly to Europe every weekend. No, I don't do that kind of stuff. I'm just a below average person. I'm the person you see. They used to call people like me wallflowers. Someone you just see, but we don't talk, we don't do anything, we don't interact. We're just quiet in the background. An extra. I'm an extra in the life. Okay? So I'm one of those people seen that don't really talk very much. R. Spindola. Thoughts on TROO? Dude, why can't you give me something that I actually can sink my teeth into? TROO. Never heard of them. TROO. Troops. No. 2 reasons. Are you ready? Reason number 1. I don't do monthlies. I just don't do them. It's just not worth it. Reason number 2. If this thing was $1 6 months ago, there's no way on God's green earth this thing has 20 years of increased profits. So it's a no. Sorry. SanDisk. I think that's way out of my price range. SNDK. I don't do high of the year. That makes no sense at all. And $665 a share? Yep, no thanks. Okay, so however much money you think I have, you're just a little wrong. Michael, you booked a call? Cool beans. I'll be looking forward to chatting with you. Okay, thank you there, Michael. Jason, I can get to my number with my conservative 401k projections, but I want more, of course. Oh, so you want more. So you actually have enough to retire now. You just want more. Well, there's nothing wrong with that. Okay? Nothing wrong with that at all. But do you have a strategy? See, you have, okay, Jason, okay, when you get to that point, Okay, retirement. That's the point I'm talking about. Retirement. When you get to retirement, you got two choices, Jason. One, learn to do it yourself. Two, give up accountability and just say, here, you do it. Give it to someone else, have them do it for you. But I can pretty much guarantee if you give it to someone else, they're probably not going to have your best interest in mind. Probably. Okay, you never know. Pet. Thank you there, Pet. Thank you. New York City Chulo. Thank you for that. Time to delete. James, when you violate your rules and get into a trade, do you ever use a collar to protect the downside? No. I very rarely do I violate my rules, but I do, because I remember you caught me in a few times I violate my rules, and sometimes I do. Sometimes I get that little green monster on my shoulder and said, hey, buy me, buy me, buy me, buy me. As a matter of fact, we did one, and I still have it, and I keep thinking to myself every time I look at XXRP. Yeah, hold on a second. XXRP. One I did that I normally never do monthlies. But here it is right here at 688. Now, I did a monthly option, which I rarely ever do. And the only reason I did it because the option was paying 5%, which is more than 1% every week. But that was when this thing was around 10. Now it's at 7. That ain't you, Utilico. All right, what else do we have over here? Susie! What's happening, Susie? Alexander Ron, NAK. That's also on Robinhood. What is NAK? NAK. Northern Dynasty. Interesting. $2. Okay, Ron, I don't know if you heard when I said rule number 3. Rule number 3 is 2 decades of consistent profits. This thing was at less than $1 in August. That's what, 5 months ago? Less than $1. How can you tell me that this thing has 2 decades? That's 10, 20 years of consistent profits. No, it probably doesn't. I'm not going to waste my time with it. Peyton, P-U-R-R. What the hell is that? P-U-R-R. Hyper liquid strategy. Hell no. Don't you pay attention either? I don't do stocks that were $1 a couple of months ago. There's no way that has 20 years of profits, and it has no options. So no, no, and no. Okay, yo, Alex, how do you find the bottom? Hey, Vinny, that's a good question. Sit tight for a second. Alex wants to take a look at Alibaba. Now, the interesting Alibaba, okay, Alex, Alibaba has only recently started to pay dividends. 2 years. That's it. When I said 2 decades, I'm terribly sorry I didn't say 20 years. There's a big difference between 2 years and 20 years. All right? So, 2 years. That's it. QQQI. Sonia, didn't we just talk about the Qs? Uh-oh. PLTR. Oh, my God. Don't you guys do any work yourselves? PLTR. No dividends. What was that other one? QQQI. Not consistently profitable. Kroger, KR. Now that is something that is consistently profitable, and it's on Warren Buffett's list. So why the hell not? Take a look, especially that area right there. The high, the low. Where was it? Where is it? Look at the motion. Up, down, up. It's like perfect. Okay, the high is here. The low is there. We were 62 a year ago. We shoot up to 74, drop down to 58. Now we're back up to 63. Okay, hits the bottom. Now she's going back up again. The 63 is going, oh shit, 59 to 87. Barely making our 1% if you like Kroger. Okay, running gold. Thank you for Kroger. So let's look at the last 3 days. Here you go, the last 30 days. The top, the bottom, where was it? Where is it? Look, down, up, down. Now she's going up. 1, 2, 3, 4. 4 days in a row going up. Well, ask yourself the question. Do I know who Kroger is? What does Kroger do? It's a grocery store, kind of like Piggly Wiggly, Angelo's, Stop and Shop, Publix. I have no idea what the other major food chains are around the country, but Kroger is one of them. Okay. Rock Jersey. Hey, James, what's the name of the website if I want to learn 1% dividend training from beginning? The 10-Minute Trader. Okay. If you go up the top left-hand corner, there's a little picture of my face right up here in the left-hand corner. Just click on that. That will take you to my website. That will take you to a place where you can send me an email. All right, what else we got? Time to delete thinks that's funny. Mining stock. King Kimosabi. Oh, King Kimosabi. How you doing today, brother? King Wolf. Is dividend just them theme of this stream, or do you only buy dividend stocks? Well, that's exactly what I do. You do have two like on your live stream. I have 9 different channels, so this is just one of them. And yes, the main objective or the main subject of this show is investing with dividend stocks to create weekly cash flow. That's all we're talking about, okay? That's it. Mining stock. King Kimasabi, you got to give me a ticker symbol for me to take a look at it. How's coals? Hey, I think I bought some coals this morning. What do I think about silver? I love the idea of silver, money man, but silver is not a stock. Michael Jean, thank you for that, Michael Jean. That was very nice of you. Giovanni, let's take a look at coals. Wait a minute. We're still on Kroger because Kroger fit exactly what we're looking for. Okay, Kroger just so happens to be on Warren Buffett's list. And if it's good enough for old Warren, hell, I'll buy some. As a matter of fact, I've been buying coals ever since I took a look at it on Warren Buffett's list. And it's doing rather well for me. So let's take a look at it. First thing we want to do. The high, the low, where was it? Where is it? Look at it. That's the movement right there. We have plenty of space to keep. Let's take a look. What do the numbers look like? So when I say a simple safe trading strategy, that is called a covered call. So you buy stock first and then you sell somebody the rights to buy it from you for the exact same price you just paid for it. So if I'm buying it for 63, I'm going to sell it for 63. Where's my profit, you may ask? Right here in the insurance premium. That's it. That I want to collect because I could care less if the stock goes up or down. Now, don't get me wrong. I want a company that's consistently profitable and in an upward trend. I want the trend to be going the direction that I want. Whether it's going up or down, I want it to be in the direction. I want to be going the same direction. I don't want to swim against the tide. That just doesn't make any sense. Swim against the current, go, yeah, no. Just spitting into the wind. Yeah, those things are just bad ideas. So, let's take a look. Covered call for this evening, 63 on Kroger. Okay, so 63 on Kroger. There it is, 63 right there. You just won, so we know what it sounds like, what it looks like. Is it profitable? All right. Buy one covered call of Kroger. 6 February 26. That means this option is going to expire this coming Friday at 3:59 p.m. Because at 4 p.m., the market closes and just out of luck. The 63 call option against the Kroger stock at the market to open. All right. It's going to cost me $6,233. Well, what's my profit? My profit is $67. And you're probably thinking to yourself, $67, that's it? Well, what did you expect? 1% every single week is over 50% by the end of the year. Okay, now I don't want to sit in front of my computer all day. It's a 5 or 10 minute scenario. Okay, what's on the list? Now, when I say what's on the list, what stocks are getting ready to pay their dividend? because just before the dividend is paid, the stock has a tendency to go up. So by knowing when the stock goes up, or knowing when it's getting ready to go up, that gives me an advantage. That gives me a leg up, so to speak. Okay? So by knowing when the stock is going to move, that allows me to position myself. So I buy it at 63, I sell it at 63, and I collect that little bit of a premium right there. But what is it? Well, let's get the calculator out to find out what return is. Okay? First thing we do, take the profit, $67, and then we divide it by the investment. Well, the investment is $6,200. Okay? Divide 62.33 comes to a grand total of 1%. That's it for 4 days. Okay, so I'm buying it at 63, I'm selling it at 63, and I'm collecting the premium. The premium's what I'm after. I don't care if the stock shoots up, and I'd like to say I don't care if the stock goes down, but I kind of do, because I don't want it to go down. That's why I look at the chart first, because the chart tells me what you guys are doing. Because you and me are the investors. We buy, we sell. And guess what? 5,881,000. 5,881,000 shares traded today. So my 100 shares doesn't mean anything to 5.8 million. But I still want to be on the right side. I still want to be where the stock is going up. Okay? So that's why I look at the calendar. Because the calendar tells me what stock. Wait, we're going to get to that in a second. But we're going to look at the calendar in a minute. So sit tight. So 1%, let's save this one. We'll add it to the ones from yesterday. And it is 1%. Okay. Uh-oh. There we go. Royal. There it is right there. And here we go. There it is right there. Kroger by one contract. Kroger, 6 February. That's the expiration date, meaning this option expires this coming Friday. So I buy the stock first thing in the morning. I own it. I can do whatever I want. But I'm going to turn around and immediately sell it to someone else for the same price I just paid for it and collect the premium. The 63 call option, $67, 6,200. Now, if you don't like the idea of investing in the stock market, think of it this way. Think of it as if you are creating weekly cash flowing assets. Think about it. It's like a gumball machine, a candy machine, a vending machine, soda machine, whatever. Something you pay for once, okay? $6,200. And every single week, it gives me a rate of return. This week, it just has to be $6,700. What is it going to be next week? Well, we won't know until next week. The week after, we won't know until the week after. Because right now, this is the game we're playing. This is the sandbox we're playing in. So between now and Friday at 3:59 p.m., this is the game that's on the table. Okay? If it hits my target, great. I get the profit and I get all my money back. And then Monday, I pick something else. Worst case scenario, the stock goes down a little bit. I keep the stock. I keep the profits. Next week, I sell it to someone else. That's it. Never buy something you don't want to hold on to. Never buy something that doesn't have weekly options. Because what I'm looking for is consistency in profitability and preservation of my capital. That's my only two goals. Consistency of profitability and preservation of my capital. That's it. All right. So let's save this one and move on to the next one. $1%. That's it. Next. All right, next. Let's get out of this one and Pick the next one. What was the next one? Back to the beginning. Here we go. Back to the beginning. Ooh, IBM. I like IBM. All right. Hood doesn't have 20 years of dividends. That much I know. Time to delete. AbbVie. Like AbbVie. ABBV. Here we go. Whoops. ABBV. AbbVie. Ooh, nice. Nice. Okay, first thing I want to see. The high, the low. Where was it? Where is it? Where is it going? See that? Up, down, up. The last 30 days. Let's zoom into that. What can we expect from this thing? Here's the top. Here's the bottom. Now she's going up again. Currently at 225. The 225s are going for $5. That's more than 2%. So let's do a little bit of math real quick. All right? We all know there's 1 year, 365 days, 12 months, 52 weeks. So if you're going to invest, would you like to invest monthly and get 12%? Because 1% per trade is 12% by the end of the year. Or 52 weeks, 1% each trade, that's over 50%. You decide what you want to do. I know what I want. I don't even want to look at monthlies. No, thank you. Okay, so down, up, looks good, looks good. The numbers, remember I said make sure the numbers work, rule 5. Make sure all the numbers work. What am I buying it for? 225.64. What am I selling? The 225s. What am I collecting? 515. Is that more than 1%? Yes, it is. Because 1% of 225, this is the funny part. A lot of people don't get it until I explain it to them. 1% of 225. 1% of 225 is 225. $225. 1% is $2.25. You're just moving the decimal point over 2 places. 1% of 225 is $2.25. So 1% of 225 is $2.25. That's all I'm looking for. But this one's paying $5.15. That's more than 2%. That's what I'm looking for. Let's check it out. All right, let's get rid of this because the chart looks okay. Okay, here's where it was. She down, up, down, up. Yep, that's going up. Say whatever you want, but it is going up. Here we go. Right there. Get rid of this. Got that. Change it to the covered call. The 225s right there. Back down here. Just 1, 2, 3, 4, 5, 6 right there. And here's Johnny. Johnny, tell him what he's won. All right, Bob. Here we have 1 covered call AbbVie. 6 February 23. That's this coming Friday. The $225 call option. The stock is currently at $225.64. Okay, so I'm going to lose 64 cents right off the top. All right? So if I'm buying it at $225.64 and I'm selling it at $225, they're going to take that 65 cents out of that $5. So now I'm only walking away with $493 for 1 contract. Remember, 1 contract. So if I buy the stock at $225, buy 100 shares, I got 1 contract. If I buy 500 shares, I got 5 contracts. If the stock drops down, let's say it drops down to $100, how many contracts do I have? I still got 5. Although the stock price decreases, the amount of contracts never change. So I can always sell a contract regardless of what the stock price is. The trick is to make sure when you sell a contract, not sell it too close to where the action is, which means the closer you get to where the money is, the more risk there is. More profit, but more risk. Because there's a risk-reward ratio. Higher risk, higher reward. Lower risk, lower reward. Well, guess what? You can't get much lower than 1%. That's pretty low. And I'm pretty much okay with that because 1% every single week is over 50% per year. Okay, I'm going to stop this right here. All right, I'm going to pause it right there. So let's check out the math. Are you ready? AbbVie, 6 February. The 225 call option, 493, 22 G's. Let's figure it out. Are we ready? Okay, calculator. 493 divided by the outlay. What is it costing me? What is my investment? Well, it's 22,007. Well, that gives me a rate of return of 2.2%. So let's do a little bit of fun math. Are you ready? Okay. If 1% every single week is over 50% per year, how much do you think 2% every single week? Wait a second. 2.24. See? 2.24%. That's 2.25 a week. Well, for this week anyway. Who knows what it's going to be next week? And that's kind of like the fun part about it. It's like you buy a stock, great, I love the company, wonderful. It's giving me 2.25 this week. I wonder what it's going to give me next week. But I only do weeklies because, remember I said simple, safe, predictable, and consistent? Consistent means every single week. Every week. Not once a month. Yeah, no thank you. Every single week. Hold on. I'm not doing it. Okay? I got 9 channels. 9, which means I got 1, 2, 3, 4, 5, 6, 7 screens in front of me. Which means you take all those screens and multiply it by all the questions you guys are asking at the same time. I can't get to all of them. So I pause the screens and I answer them as I progress through the evening. And I will try to answer all of them. So bear with me. If I don't get your question right away, don't panic. I will get to it. King, is Dividend the same stream? Yeah, I already talked about that one. Rock Jersey, up at the top, link. Yeah, fine there. King Kimosabi, mining stock. You got to give me the ticker symbol. Oh, wait a minute. We want to save this one. Yeah, 2.2%. Yeah, I want to save this one. Give it a second. 2.2. Sounds good. Get rid of this. Get rid of that. Get rid of that. Get rid of this. Back to right there. Here we go. Right here. In case you didn't see it, there she be. Right there. Right there. Buy one covered call AbbVie. ABBV. 6 February 26th, that's this coming Friday. The 225 call option, 493 is the profit, 22,000 is the investment. 2.24% for 1 week. Actually, 4 days. Because Monday's already come and gone. Monday's already gone. So Monday, we have 4 days left. That's it. 2.24% for 4 days. $2.2. Yay! 2.2. Woohoo! Next. Ron Shavada. Okay, IBM. Why not? I like IBM. IBM. I'm going to say no to IBM only because the high is right there. I don't buy anything at the high. Sorry, don't get me wrong. I love IBM. It is on my list, just not this week. Floorman thinks that's funny. Jaws wants to take a look at LVS, which I believe Las Vegas Sands. Is that right? LVS? No, wait a minute. LVS is Southwest Airlines. LVS. Las Vegas. I was right the first time. Okay. Oh, yeah. Look at that. 55.64. 56. Oh, hell yeah. Okay. Just quickly, go get the numbers. Now, when I say I look for the numbers, I'm looking for 5 things. Okay, where's the high? Where's the low? Where was it a year ago? Where is it now? What's the motion? What's the flow? What's it doing? up, down, up, down, up, down. Got a big gap right here. That looks awesome. Why does it look awesome? Because gaps have a tendency to fill. Let me explain. Looks the last 30 days. Okay, 30 days, same thing. High, low, where was it? Where is it? Look at the motion. Down, up, down, up. 2 days, see, right there. Someone asked earlier, how do I find the bottom? The bottom just jumps out at you. It says, here I am. You ready? Okay, the bottom, Thursday. Friday was higher, today was higher. The only way you can find a bottom is to have something to compare it to. Big drop on Thursday, bottomed out at 52. Thursday a little higher, today a little higher. So tomorrow, perfect spot to jump in. So let's see what that would look like. Enron, we already looked at IBM. Okay, sit tight. So let's get rid of this. The 5564s, let's do the 5564s, do the 56s. Yep, that works. One contract, so we can take a look at the good numbers. Here we go. Buy one covered call, LVS. 6 February, which is this Friday. The 56 call option. The stock's currently at 55.64. But if I buy it at 55.64, what's the closest strike price? It's going to be the 56. Now, the 55 would be safer because it's lower. Stock's already above there. But I'm okay with the 56 because it's paying 109 for 5,500. Well, let's find out what that rate of return is. Calculator. 109 divide 5491, grand total of 1.98. That's almost 2% for 4 days. Let's save this one. Let's save this one. Sands, Las Vegas. If you like it, of course. Remember rule number 1. Never buy something you do not want to hold long term. If you don't understand it, don't buy it. Okay, Vinny, how do you find the bottom? Vinny, I just showed you. To find the bottom, you got to find the low point on the chart and then look for something that goes a little bit higher next to it. All right, where are we? Right here. And there she is, Sands, Las Vegas. Buy one covered call, LVS, 6 February, the 56 call, 109 is the profit, 5,500 is the investment for a 1.98% for 1 week. 4 days, actually. But think about it. 1.98. I remember a couple of years ago where the CD rate was 1% per year. This is paying 1.98 for 1 week. I don't know. Does it make sense? $1.9. Gotta love it. See, I remember reading somewhere earlier that someone said it's very challenging to find good stocks nowadays. We just found 3 of them just now. But, well, William says it's recorded. Thanks, William. No, it's not recorded, William. So, why does dividend... I'm going to have to come back to these. Okay, hold on a second. We're going to time out for a minute. Get my seat here, and we're going to answer some questions because I get way too many questions sitting here. Questions. Do I like to sell puts? JWH 119. Absolutely. If it calls for it. Jason, I'm 46. I want to add to my... Okay, got that one. Spindola, TRO. We already looked at that one. That one was a no. SanDisk out of our price range. Freak you later. CRML. What the hell is that? Never a good sign when I say, what the hell is that? All right, back here. All right. CRML. Critical metals. Ooh, no. Wasn't that quick? Did you like that one? No. Okay, so freak you later. Can you explain to me in a manner which I'll understand if this company is $1 back in May and June? How could it possibly have 2 decades? That's 20 years of consistent profits. All right, now it may be great for the future because look, it's $1 here. It jumps up to 32, pulls back to 7, jumps up to 22. Now it's at 12.50. Okay, you missed the part where I said I want predictability. That's not predictable at all. I want consistency, which that's not consistent at all. Okay? But it does have weekly options. Okay, fine. But look at the option price. 12.59 to 12.50 is going for 85. That's a big profit. If you like that. Well, I don't touch stocks like this because it doesn't have very much historical performance. But it might actually work for you. Not for me, though. Okay? Heats. Yeah, SanDisk, we already said no to that one. Michael, we already said no to SanDisk. Sorry. Jason. Okay, thank you. Time to delete. We already did that one. Coles. Let's take a look at Coles. I did buy some Coles this morning because as you can plainly see, Coles, that's a high right there around 25. Drops down. Look what it does right there. Nice little movement. Look at your last 30 days. Okay? You got your 30-day high here. It drops down right there. Look at this. 1, 2 days up right there. Okay? Vinny, that's how you find the bottom. Right there. Okay? That's the low point. That's higher. That's higher. 2 days to the upside from the bottom right there. 1, 2. Now she's going back up again. That's what stocks do. They go up until they're done going up. And then they go down until they're done going down. It's basically that simple. Do you believe in 401ks? Anthony, no, I don't. If you take a look at the fine print on your 401ks, the next time the bank is in trouble or the government's in trouble, yeah, they're not going to do a bailout. They're going to do a bail-in, which means they're going to take your savings out of your 401k. Don't believe me if you don't want to, but do some research. Read the fine print. Christopher, VCM Punk. I have no idea what that means, but okay. Thank you there, Christopher. Yeah, so anyway, Giovanni, I did buy some Coles this morning. Because look, she's bouncing up. Now we're at 17.97. So the 18s right there paying 41. That's over 2%. All right, let's do it. It's a good one. No, it's not a suggestion. Okay, it's not a tip. It's an observation. Somebody asked me to take a look at it. I took a look, and we are doing the 18s right there. Okay, just one contract. There we go. And here's Johnny. Buy one covered call, Coles. 6 February, $18 call option. The stock's at $17.97. Think about it. If I buy it at $17.97, I sell somebody the right to buy it from me at 18. Ooh, I'm making a whopping 3 cents. No. I'm making this right here, whatever that premium was, which is $50 per contract. So $50 per contract is the profit. The investment's only $1,700. So what's the rate of return? Calculator. $50 profit divided by the investment, 1750, comes to a grand total of 2.8% for 1 week. But here's the thing. Do you like Coles? That's a big question. Well, question number 1 should be, does it make sense? That should be question number 1. Does it make sense? It either makes sense or it doesn't. Buy a good company, sell it to someone else for the same price you paid for it, and collect the insurance premium. If it goes up, great. You made that little profit. It goes down, well, you got a stock that you wanted to buy anyway. And if it pays dividends, hopefully the dividends increase every single year. That's why I like companies with 2 decades of increased profits. Because if they do it for 20 years, that's 2 decades, well, more than likely, year 21 is probably going to be the same. Okay, does it make sense? It's either yes or no. Let's save this one, because I like Kohl's. It's one of the few companies I actually buy over and over and over and over again. Because the market maker, I think he just likes me. Because he gives me that profit every single week. And I'm okay with that. And there we go, right there. Here we go. Kohl's. Buy one contract, Kohl's. 6 February, that's this coming Friday. $18 call option. $50 the profit. $17.50 is the investment. That is 2.8% for 1 week. If you like Kohl's. It always comes at that. If you like Kohl's. All right. Let's go back here. $2.8. 1, 2, 3, 4. We got 4 of them already. Whoa. They were not even done yet. Let's keep on keeping on. Albert, Finance Crypto Club. Woohoo! All righty, hold on there, Albert. Oh, my goodness, he's got a lot to say. Holy shit, he's got a lot to say. That's why he's got a lot to say. He's spamming you guys. All right, where were we? All right. Oh, my God. He does have a lot to say, doesn't he? All right. Do I do options? Yes. Your beer investment ever. Okay. I have no idea what that means, but okay. All righty. Now, I don't know how I missed this. All right. Good picks are getting hard to find. Yep. Isn't Cat towards the all-time high? Yes, it is. Wall Street. Yep. Got that one. All right. For those guys who put questions in here, sorry, I got to go by them because somebody decided to spam everyone. And I hate when that happens. I don't know how that got by me. Well, I know how. I was watching. Utilico. Thank you for that. I'm going to take that as a compliment. Thank you. All right. AJ wants to take a look at Verizon. Yay, Verizon. Woohoo. Okay, so let's get down here. Let me answer some questions first before we go on any further. Because they're just piling up questions everywhere. All right. Let's see what we got. All right, AJ, Verizon. I'm going to look at it real quick. Verizon. Ooh, hell no. Okay, after a big jump like that, see that gap up right there and it keeps on going? Yeah, I don't want to jump into that. I don't buy it the high. Why does the dividend matter if you get called away? Uh-oh. Uh-oh. AJ. Okay, now I haven't done this in a while, so let's take a look at this. AJ wants to know what matter. AJ, you're relatively new here, so buckle up, buttercup. Let's take a gander at this. You ready? This is an EX dividend calendar. Like any other calendar, it's got the days of the week. This is a whole month, okay? The first, second, third, fourth, blah, 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 the month of February. This is what we're looking at. Okay, now these little green dots represent companies that have been consistently profitable for a quarter of a century. That's 25 years. All right? Oh, wait a minute. Those are CBO weeklies. Okay. Well, my bad. Okay, so let's take a look at them. See if you recognize any of these stocks. Hold on. T-Mobile, Kroger, Eli Lilly, Carnival Cruise Line, Starbucks, Sherwin-Williams, Ford, WFC, Wells Fargo, Energy Transfer, Valero, Lennar, Nokia, MetLife, Citigroup, Apple, IBM, Visa, Siri, Target, TJ Maxx, ExxonMobil, Microsoft, Applied Materials, blah, 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 blah. Every company up there has a weekly option, and they've been profitable for at least 25 years. 25 years, that's a quarter of a century. Okay? So, by knowing when the company is going to have their EX dividend date, let me explain the EX dividend dates for a second. There's 4 dates to remember when it comes time to dividend stocks. Date number 1, the announcement date. The announcement date is basically simple. Good afternoon, everyone. My name is James. This is Dividend Stock Talk. This is how much money we made this year. This is how much you're going to get, and you're going to be so wonderful. This is going to be great, awesome. Yeah, it's the announcement date. It's just telling you how much they made and when you're going to get yours. That's all it is. It's just the announcement date. Second date, this is the most important one. The EX dividend date. That is the last day the stock trades before the dividend is paid. In short, if you want to collect the dividend, you got to buy it before that little green dot. Wherever the little green dot is, look at them all. 2, 4, 5, 7, 11. 11 of them. First week of February. This is just one list. I get about 5 or 6 lists. 11. Look at here. 3, 5, 9, 11. Oh, fuck me. 19. 19 next week. The next week. 3, 5, 8, 8 the following week. The last week, 4. Well, they haven't listed them all yet because this is 4 weeks away. So, yeah, we got plenty to choose from. Now, I can't buy every single one of these, and this is just one list. There's a bunch of other lists. All right, this list here are the companies that have quarter of a century of increased profit. Have ExxonMobil, Target, IBM, Grainger, Consolidated Edison, Aflac, PPG, Smuckers. Ooh, Smuckers jam jelly, yeah. Okay, SPG, Johnson & Johnson, Aflac. Already did Aflac. But anyway, I got a bunch of lists. And these tell me when to look at the stock. Because just before the dividend is paid, the stock has a tendency to increase in value. So knowing the calendar, when a stock is going to go up, that allows me to jump in and do a simple, safe trade that gets me my 1%. Okay, date number 3, date of record. Whoever owns the stock on the date of record is entitled to the dividend. Plain and simple. Okay, date number 4, payment date. That's just when you're going to get your money. So by knowing when a stock is going to pay its dividend, that tells me when to buy the stock. Because then I can jump in, get my quick little 1% fix, and then move on to the next stock. All right, what else do we got? All righty. Hey, Dale's back. Way to go, Mr. Dale. AbbVie has earnings this week. Okay. Utilico, thank you for that. Wally, what's happening, Wally? Why does the app matter? Okay, great. Dale, nice to hear from you, Dale. But the relative premium does. Okay, Dale, I missed the first half of that conversation. If you can explain to me, but the relative premium does what? Okay, the relative premium does what? Not quite sure. Now, Dale, I don't want to insult you in any way, shape, or form, but I got 9 different platforms going, which means 1, 2, 3, 4, 5, 6, 7. 7 different screens with questions on it. So when you blurt out a half of a question or half of a statement, I have no idea what you're talking about. And William Robinson, no, it's not recorded. Okay? Tomorrow, it will be recorded. Today, it's currently being recorded. That's weird. It's not recorded, past tense. It's being recorded, present tense, if that makes sense. Heartfelt Creations, good evening. Big Ken, AbbVie's paying because of its earnings. No, AbbVie pays every 90 days. Think about it, Big Ken. Every 90 days, AbbVie has a dividend. Dr. Corey, Dell 1.8. I think it's higher math for me. Uh-oh. Dr. Corey, let's take a look at Dell. I do have some Dell, by the way, just in case you're wondering. Interesting. Take a look at that right there. The high, the low, where was it? As it look at the motion. But what's going on right here? The most current 30 days. Where is it going? It's easy to see. Okay, 30 days ago was the high. 2 weeks ago was the bottom. Now she's moving up. Okay, so we're currently at 119.16. So the 119s are going for 270. That is more than 1%. But do you like Dell? That's such a uh-oh. Okay, so the 119s. Let's check it out. Dell 119. If you like Dell, it's always that little pain in the butt question. Do I like this company? The 119s right there. One contract. Here we go. And let's take a gander. Buy one covered call Dell. 6 February. That's this coming Friday. The 119 call option. The stock is currently at 119.16. If I buy it at 119.16, sell it at 119, well, I'm walking away with 204, and it's got to put up 11,000. So what's that rate of return? Let's check it out. Okay. 204 is the profit. Divided by the investment, 11,696 comes to a grand total of 1.7 for 1 week. 1.7 for 1 week. Okay, let's save that one. That's going to be the last one we do tonight. That's 5. I think 5's enough. Let's answer some questions. Let's answer some questions. Here we go. Where is it? Where is it? Where is it? It should be right about there. It is right there. Oh, there it is. And there she is, right there. Buy one covered call Dell. 6 February, the 119 call option. Well, 204 is the profit. 11,000 is the investment. Well, think about it. You got to put your money somewhere. You got two choices. Do it yourself or give it to someone else, let them do it. And guess what? If you give it to someone else, they're going to put $11,000 someplace. Okay? Dell, we got that one user. Utilico. Can you sell the call but not buy the stocks unless it gets put to you? Please explain the difference. Ooh, good question. Now, Utilico, when you sell the call without owning the stock, that is called a naked sale. Yeah, you can do it, but you need to be approved for that type of trading. And years ago, that used to be a level 5. Okay. Now I believe it's a level 3. Okay. That's like the highest level you can get, which means, and you have to have the cash to be able to substantiate it. Okay. Nothing wrong with it. I mean, you can do it. All right, let's keep on going. All right, here we go. I hate it when it does that. Does that right there. All righty, let's do this. Give it a minute. We're going to answer some more questions. Oh, boy. Bajan videos. 100,000 JEPQ and 100,000 SPYI. I feel bad for you, brother. I do. Uh-oh. What was this one? It was 1.7. 1.7. Okay, 1, 2, 3, 4, 5. 5. We got 5. That works. 5 a night. That works for me. Next, what do we got? Okay, Bajan videos, JEPQ and SPYI. I'm not going to tell you what to do with your money, brother. I'm really not. But if you check the profits on those, you'd probably change your mind. Okay, sit tight. See if this thing's working at the moment. Because it wasn't working a while ago. Okay. Somebody wanted to take a look at the Q a while ago. Sit tight. Okay, I forgot who wanted to take a look at the Qs, but in 2006, March 17th, 2006, the very first dividend, 20 years ago. All right, you ready? 2.9, 2.6, that's backwards. 2.3, that's backwards. 5.4, that's up. 2.7, that's backwards. All right, so here we go. 2.9, lower, lower, higher, lower, higher, lower, higher, lower. Do you see it? This is just the Qs. Okay, so let's keep on going. 7.3, lower, higher, same, higher, lower, lower, higher, lower, higher, lower. Look at this. 7.3, 4.9. That's a big drop. No, I don't like that. So, what do we have here? Okay. Bajan videos. You got 100 grand in JEPQ. I feel bad for you, brother. I do. But you know what? If it works for you, why not? You know what I mean? JEPQ. Let's take a look and see